Now, if I hear any trading terminology trending on social media or wherever it may be, I'm going to do a video about it. Now, in this video, we're going to look at the GTC trading order. Hello, I'm Stephen Hode, trader and founder of the Stop Hunter. So let's not hang around and let's dig into what the GTC order is. So you'll be pleased to know there's nothing too complicated to this one. GTC stands for Good Till Cancelled, and it means exactly what it says on the tin. So you've got a trade idea, whether that be in FX, commodities, stock markets, whatever. You want to put the order in, but you're not sure when that price of entry is actually going to happen. So you want to leave in an open-ended order, i.e. the Good Till Cancelled order, because that will stay in effect until you physically close out that order. So that might happen tonight, tomorrow, whenever. So that leads to a few issues around the Good Till Cancelled order, and that's about trade management. And obviously, you know, if you forget about the order and you get taken in and you didn't want to be in the trade, that's a problem. The price of that asset that you're trading might have spiked suddenly, you're not aware of it, you're in a trade that you didn't want. So trade management of the orders is essential for you not being caught out, but it is a great way of putting an order in, letting it roll, and you're in control of when you close out that order. So most orders will close out in the same day. This one allows you to expand upon that time horizon, but like I say, management of that order is critical. So let's just take a quick look in one of my broker accounts to how you would go about making sure you've ticked the right boxes for a Good Till Cancelled order. So here we are in a pretty dormant city index account, where it's going to allow us to look at the example of the Good Till Cancelled order. So for whatever reason you're thinking that the price of oil is going to go up, so you find oil in the platform, you hit the buy button and it brings up the order box. Okay, so if you hit the trade button there, then you're just buying and selling at market, but we want an order. Click on that, and if you notice, it gives you the option there automatically. So this stands as default as Good Till Cancelled, so you'd always be running Good Till Cancelled order. Again, important for you to note when you're trading, because otherwise you might be thinking you're getting the order closed out at the end of the day, and it actually continues. If you click on the button here, the City Index account offers you a couple of other options: good till the end of the day and good till time, but we want the Good Till Cancelled order, so you just make sure it's clicked, you fill out the order price and details, and you hit your order button. This is just a spread betting CFD account. It would be the same process whether it be futures, whatever. It's really is a generic process across markets and products. So here you go. That's a simple example. Most brokers will offer that facility, Good Till Cancelled. It's useful to have in your trading, and like I say, be careful around the trade management side and the order side if you're using it. There you go, short and sweet today. Hopefully you've now got the idea of the Good Till Cancelled order. If you've got any other questions or trading terminology you'd like me to explain, then put that in the comments below and I'll try my best to answer your questions. So I hope you've enjoyed the video. If you have, please hit the thumbs up button for me. Don't forget to subscribe and hit the bell buttons to receive any further notifications of future content I'm going to produce. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.